A 3-2-1 buy-down mortgage is a type of home loan that temporarily lowers the interest rate for the first 3 years of the loan term in exchange for an upfront fee either paid by the seller or by the lender. A lender will lower the interest rate on the mortgage by 3% for the first year, 2% for the second year, and 1% on the third year. Now, after that, your mortgage will revert to the original rate of the 30-year fixed rate and will never change. So before we get into a specific example of this, let me tell you some of the highlights of this. Number one is you will have a lower payment, obviously, over the first 3 years. Number two, any unused funds to support that lower monthly payment in those first 3 years, like for example, let's say you were to refinance, any unused funds would go against your principal balance to bring that balance down. So the cool thing is you don't lose any of those funds. But to illustrate it even further, let me show you an actual example as if you were to buy a house at 1.249 and putting 20% down. Let's take a look. In this example, let's assume that your 30-year fixed rate is 6.99. So for the first year, being 3% lower temporarily, will give you an interest rate of 3.99, and it would lower your total payment, which here it includes principal and interest, property taxes, and insurance, to $6,265, which off the 30-year fixed mortgage of $8,142, that's going to save you over $1,800 per month for the first year. Now, the second year, it's going to go to a 4.99. The payment's going to go to $6,858. It's going to save you $1,200 per year. Whereas in the third year, it's going to go to 5.99. Your payment's going to go up to $74.85. That's still a $656 savings. And after that, it will revert to the 30-year fixed rate. So this is a great idea if you are to put an offer on a house, and monthly payment for the first 3 years is going to be a factor for you. We do believe that interest rates are going to go down, and so if you're in that same camp, this will allow you some payment flexibility while we wait for the interest rates to go down. Because here's the thing, if you were to ask for a price reduction, let's say of $50,000, that same scenario of this house would only lower your payment by about $300, which is great. But if you're looking for that payment relief, this is the opportunity this is a program that you should consider. If you have any more questions about this, hey, by the way, if we're not working together, let me know. I'd love to connect with you and see if this program or any other programs that we have are right for your family. I hope this video helps. If you have any questions, reach out. Paulo Brantz, Clear to Close Brokers. Take care.